Clem Miller, you say the transition from old economy stocks to new economy stocks has years to run. Can you give me your quintessential new economy stock or company?
Well, I've got two for you. One is Alibaba in China. Alibaba is basically the Amazon of China. You can buy anything you want, goods, services on Alibaba. Alibaba has a market cap of about 2/3 that of Amazon, so it's a huge mega cap stock. It's listed on the U.S. the New York Stock Exchange with an ADR, and was recently included in the MSCI China Index. So if you want to buy it, along with some other China stocks or emerging market stocks, you can buy the ETFs that link to that benchmark to the MSCI Index. Another one that I would mention is Mercadolibre. Mercadolibre is based in Argentina, but it's not an Argentine company per se. It's a Latin American company. Operates all over Latin America, does exactly the same thing that Amazon does, that Alibaba does, but it does it for all of Latin America. So basically, the story behind Alibaba and Mercadolibre is that they are servicing the new rising consumer middle class in emerging markets.
But is it all about investing in tech when it comes to the new economy?
No, actually there's a whole realm of what I would call consumer finance. So these would be companies outside of sort of the old state banking systems in emerging markets. So that would include insurance companies. I mean, just think about China, for example. In China, you have one of the largest companies in China is Ping An Insurance. Ping An Insurance is a property casualty insurance company. Quite something for a country that didn't even really have property ownership not too long ago.
So is there no value left in old economy stocks? Because last year, when you look at some of the IPOs of the new economy stocks, the tech names did pretty poorly, scared a lot of people. Yeah. So if you want to find out some old economy stocks, where would you look?
Well, first of all, new economy stocks, that's really a long-term prospect. So we're looking at those to generate returns, generate stable returns over the next 5 to 10 years. When we're talking about old economy stocks, those are actually quite volatile over the long run. The reason they're volatile is because basically these are smokestack industries. They depend on exports of goods, they depend on commodities, both for imports and exports. So commodity price volatility, and we've seen a lot of commodity price volatility lately, as well as currency volatility with exchange rates in emerging markets, has really hurt these old economy stocks. Now, you ask about value for the old economy stocks. With old economy stocks, you do have very cheap valuations in some markets, not so much in others, but in some markets that have really been beaten down, like Brazil and Russia. They look very, very attractive, but you have to take into account that there is a very significant political risk element that is affecting that. So if you're willing to take sort of a long-term position and say, well, over the longer run, oil prices are going to come back for Russia, or in Brazil that Dilma Rousseff, President Rousseff's problems will sort of vanish, or there'll be a new president who manages things better, then by all means, buy cheap now.
All right, well, thanks a lot, Clem Miller.
Thank you.
And thank you for watching The Street.